The federal budget has committed billions in new spending, and part of the plan for paying for that increase in spending is an increase in the capital gains tax. Prime Minister Justin Trudeau says that by voting against the budget, the Conservatives are siding with multimillionaires and standing against fairness. But opposition leader Pierre Poilievre says that those targeted by the new taxes will avoid them. Budget 2024 laid out $53 billion in new spending over the next 5 years. Joining us now to unpack the debate over the capital gains tax is Brendan Caldwell, director at Caldwell Securities Limited. Thanks for joining us, Brendan.
Julie, always great to talk to you.
The 2024 federal budget came out last week. Let's discuss a few of the issues. What can you tell us about the capital gains tax?
Oh, what can I tell you? So capital gains have historically been taxed at a lower rate than regular income. The idea behind doing that is to encourage investment. And also, where unlike regular income, it can take years to many years for you actually to realize a capital gain. And there's a lot of risk involved. When you go to work, you're in a job, there's not as much risk other than you lose your job, but you're going to get paid what you're owed. But the capital gain is by no means certain. So inherent in the risk, the time frame, and to encourage investment capital gains tax rates have been lower. Up till recently, half of what the regular income tax is. This present budget proposes to crank that up a notch for trusts, for corporations, and for capital gains over $250,000 a year. And you may say, well, they're just, what was the quote you had? They're just siding with the wealthiest Canadians. Or as my actually very good friend, Christopher Freeland said, wealthy Canadians need to think about the kind of Canada they want to live in, or words to that effect. And unfortunately, I'm fielding calls from wealthy Canadians who are saying, yeah, no, we're done now. When you get the tax rate to a certain point, Canadians are very compliant. How do you get 100 Canadians out of a pool? You say, would everybody please get out of the pool? And we do it. But once you get to a certain point, once the burden becomes too onerous, people are looking at options. I think you said the wealthiest will look at alternatives. Well, the important thing about this capital gains tax for anybody that's thinking of taking a capital gain, a large one, say they're selling a cottage or a second property or any other sort of capital gain in this year, if you take that capital gain before June 25th, we're talking a large gain, well over $250,000. If you take that gain before June 25th, you get a lower rate. If you do it after June 25th, you get a higher rate. So there needs to be some thought and tax planning around that. And we're also fielding a lot of calls around that.
Okay, so what are you advising your clients?
I'm not advising them to flee, put it that way, but I am talking with them about crystallizing some capital gains before the June 25th deadline. And this is intentional on the part of the federal government to bring forward some gains into this year, because there will be gains taken in calendar 2024, or from the point of view of the government, fiscal 2024-25, that they wouldn't have been taken otherwise. People will crystallize gains in the next 2 months that might have left those gains unrealized and therefore untaxed for years and years. So it is partly going to generate a windfall for the government in the next 2 months. So it's a question of what to do. My father has a wonderful expression. Anytime I've ever made an investment decision for tax reasons, it's always turned out to be a mistake. Maybe this time it's different, but it's at least a conversation I'm certainly having with our clients.
Interesting. So it seems like the budget on tax on innovation and business growth, do you think that this will lead companies to leave Canada, like you mentioned, and or not come to Canada at all for a place for investment?
Well, it's at the margins, and that is the next investment, the next dollar. We'll get to a place where it's almost like in Canada, to get anybody to invest here, it's like paying the ransom. We don't deal with terrorists. Well, if we're dealing in some senses with economic kidnappers that will only come here to build a battery plant or whatever, if we're willing to pay them, let's pick a number, $13 billion. So the idea that Canada stands on its own merits and investors in Canada will want to buy into Canada for what it has to offer inherently. As the tax rates go up, our value proposition becomes less and less, except for targeted, specific government-sponsored areas. And governments are good at certain things. I will give them that. Picking the next economic winner isn't one of them. And if I'm picking battery plants as an example, the idea that the battery plant is going to be the next big thing at a time when Tesla is cutting its prices because sales are slowing, yeah, maybe not a winner. The one thing I will say that's worth people noting is the lifetime small business capital gains exemption has gone up to $1.25 million. So it means that if you own your own business, you can get $1.25 million capital gains without, it's a one-time lifetime capital gains exemption. That rate has gone up. So it will help, again, at the margin, certain small business owners.
Okay, good to know. Thanks for joining us as always.
Thank you, Julie. Be well.